Hey everyone, welcome back to the channel where we break down stocks like we're chatting over coffee. Today we're diving deep into Darden Restaurants, ticker DRI, the powerhouse behind Olive Garden, LongHorn Steakhouse, and a handful of upscale concepts. Darden has been on a steady climb lately, with shares up over 13% in the past 6 months and still holding near all-time highs even after some mixed quarterly noise. The company keeps delivering consistent same-store sales growth while navigating inflation and shifting consumer habits, which makes it a fascinating name in the casual dining space right now. At its core, Darden operates more than 900 restaurants across the U.S., with Olive Garden and LongHorn Steakhouse driving the bulk of revenue. CEO Ricardo Cardenas has steered the ship since 2021, focusing on menu innovation, operational efficiency, and selective new unit growth. The Orlando-based company has come a long way from its 1968 roots and now sits comfortably as one of the largest full-service restaurant operators in the country. Breaking down the top line, Olive Garden still accounts for the lion's share at roughly $5.2 billion in fiscal 2025, followed by LongHorn Steakhouse at about $3 billion, and the fine dining segment, which includes Capital Grille and Eddie V's, contributing around $1.3 billion. That mix gives Darden nice diversification between value-oriented and premium experiences, and recent quarters show both traffic and pricing contributing to growth. On the earnings front, fiscal 2026 full-year results came in at $13.2 billion in revenue, with net income climbing to $1.21 billion and diluted EPS reaching around $10. That's solid expansion from the prior year, helped by operating leverage and cost discipline, even as commodity pressures lingered. Analysts have been nudging estimates higher after the latest print, signaling confidence that the momentum can continue. Management's tone on the most recent earnings call was cautiously optimistic. They highlighted strong performance at both Olive Garden and LongHorn, pointed to successful limited-time offers driving traffic, and reiterated plans for measured unit growth while keeping a close eye on middle-income consumer spending. The team also flagged ongoing investments in technology and labor efficiency as key levers for margin protection going forward. Looking at the balance sheet and cash flow, Darden generated over $1.85 billion in operating cash flow last year and produced more than $1.1 billion in free cash flow after CapEx. The company carries a reasonable debt load with a debt-to-equity ratio around 2.9, supports a 2.8% dividend yield, and has used excess cash for buybacks and new restaurant development. Return on equity sits near 50%, which is impressive for a capital-intensive restaurant operator. For valuation, we're leaning on the forward PE model as the primary engine with a DCF check alongside it. The setup carries high confidence because analyst estimates are readily available and the company's mature, steady cash flow profile fits the framework well. The model puts fair value somewhere in the neighborhood of $200, while shares are currently trading around $210, so the stock sits just a touch above our rough fair value zone. What's driving that number are a normalized forward multiple of 18 times earnings, modest single-digit earnings growth expectations, and a slight deceleration adjustment relative to historical averages. The supporting DCF lands in a similar ballpark once we apply a 10% discount rate and 2.5% perpetual growth, reinforcing that the market isn't wildly mispricing Darden at current levels. On the SWOT side, Darden's strengths include its massive scale, strong brand recognition, and consistent free cash flow generation. Weaknesses center on high fixed costs and sensitivity to labor inflation. Opportunities lie in further menu innovation and international expansion, while threats include consumer pullback among middle-income diners and rising commodity volatility. Over the past year, the stock has essentially treaded water with a slight negative return, yet it has outperformed the broader restaurant industry on a 6-month basis. The chart shows a steady uptrend since the 2023 lows, punctuated by the usual earnings volatility, and technicals remain constructive as long as the name holds above the $200 area. My take is that Darden remains a high-quality compounder worth owning for the long haul, even if it's not screaming cheap today. The business model is durable, management executes well, and the dividend plus buybacks provide a nice cushion. I'd be comfortable adding on any pullback toward $190 or below, but at current levels, I'm content to hold and let the earnings growth do the heavy lifting. Just remember, these valuation estimates can shift with assumption tweaks, so always size positions accordingly. That wraps up our deep dive on Darden Restaurants. If you found this analysis helpful, drop a like, subscribe for more stock breakdowns, and let me know in the comments which name you want to tackle next. As always, this is not financial advice. Do your own research and invest responsibly. Catch you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.